Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's video, Anthony Power and I are thrilled to welcome back Patrick Fleury to the channel. He's the CFO of TeraWulf. They just came off earnings. We've got a lot to talk about in today's presentation. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comments section below if you're currently holding shares of Wulf, what you think about their strategy moving into next year, and your outlook for this business in the final few months of 2024. Now, with that being said, let's get into today's interview. Okay, guys, so that's right. Today's video, we've got Patrick Fleury. He's the CFO of TeraWulf. They just came out with earnings. This is one we've been following very closely throughout the year here. A lot of big developments from the Wulf pack, which we're going to talk about in today's presentation. So, Patrick, thanks so much for being with us and making the time today.
Thanks for having me back.
Of course. Hey, so I was just mentioning before we started filming, we're starting to attract a lot of new subscribers and viewers to the channel in light of the Bitcoin bull run. We're on the eve of, it seems here, Patrick. So if we can you do a quick introduction just on yourself and how you got involved with TeraWulf out of the start there?
Sure. Yeah, Patrick Fleury, 25 years in finance. That's why I have no hair left. The last 2.5 as CFO of TeraWulf, 18 years before that on the buy side as an institutional investor, working for a couple different firms related to George Soros and then Blackstone, and really have this seat because Paul Nazareth, the whole management team at TeraWulf, was my management team when I was at Blackstone that ran a portfolio of power plants in the US and abroad for me, and have known them for over 15 years. So that's why I am where I am today.
Makes sense. Hey, we always like to figure out how people got involved in the Bitcoin space, and we've heard from Nazar and Paul that the team at TeraWulf, specifically the C-suite management team, has been together as a fairly tight unit for quite some time. So with that being said, can you give us some of the key updates since our last visit with TeraWulf in Q2? I know there's been the sale of the Nautilus facility, the Lake Mariner lease extension, obviously HPC, and convertible notes. So there's a lot going on. If we could just do a quick high-level summary there.
Yeah, sure. So a lot going on, for sure. So let's take each one of those. So, and you have to excuse me, I have a cold that I haven't been able to kick because I've been working too hard. So, but starting with Nautilus, we sold Nautilus October 2nd. That asset was a tremendous asset for us, but it was not owned, meaning when we, and really this credit goes to Nazar, in early, I guess, 2020 into 2021, Nazar convinced Talon to sink some of their load behind the meter at Susquehanna. And, this is way before data centers or AI, right? And that was done because Susquehanna, in particular, which is about 2,500 megawatts, has a significant transmission constraint just east of it, whereby in times of grid stress, it limits the amount of power that they can effectively get through to where the power wants to move to about 1,900 megawatts. So they had about 600 megawatts where they could actually sink it there on the site, which would effectively allow them to achieve a higher price on the megawatts that they would send out onto the grid. And so I know that sounds very simple today, and everyone's trying to do that today, but 4 years ago, that was a huge step for Talon to take. And really, their former CEO, Alex Hernandez, was a visionary in that regard, and he was assisted by Nazar. So give those guys a lot of credit, because now that looks really easy and really simple, and everyone wants to do it, but it was not 4 years ago. That was a big, bold step. So as part of that process, we signed a 5-year lease with Talon, and we got a 5-year 2-cent power contract. So we were about 2.5 years through that lease and 2.5 years through that 2 cent power contract. And at the end of that lease in June of, geez, my dates are getting screwed up here, but I think towards the end of 2026, that was it. And originally it was intended that there would be 2 3-year extensions of
Yeah.
that with Talon. But as you know, what happened in the interim was AI came about in a big way and has huge power demands. And Talon was approached by Amazon and sold the land and the substation for $650 million to Amazon. And with Amazon has the intent to build about a gigawatt data center there in the future. And so that sort of introduced a new party who was effectively now our landlord and Talon's landlord. And so as the demand for power became more acute, right, for AI, what became very obvious to us was that lease was going to be done at the end of the initial 5-year term, and we were going to have zero. In other words, there's no terminal value for TeraWulf there at the end of that 5-year lease or 5-year 2 cent power contract. So we moved, given Amazon and AI in general's speed to power need, we moved to monetize that asset. We sold it for 85 million if you include the value of miners that we received and working capital. It's like about 92, 93 million bucks, which we thought was a tremendous economic return for TeraWulf because again, this was an asset that had zero value at the end of our lease. The mark to market on my power there, the 2 cent power, for the remainder of the 2.5 years from October was about 25 million bucks, right? And so we extracted, low 90s. So that to me was a home run because it allowed us then to take that capital, reinvest it at Lake Mariner into our build out of high power compute without diluting shareholders. And as you guys know, I have a very different view from all the other public Bitcoin miners out there. I think dilution in the space has to stop at some point. And, I'll jump ahead, but as you'll see, our board authorized a $200 million stock repurchase, and we effected a $500 million convertible notes offering on October 25th, the proceeds of which are going to fully fund our build out in high power compute for the first 72.5 megawatts of our site, which we will have online in the first half of next year. And in that convert, we bought back 115 million of stock on an overnight basis. And so I know we've been talking a long time, like for me, coming from a traditional commodity institutional investor mindset, every commodity business in the world, right, has a CapEx cycle that they have to get through to set up their operations. But then those businesses have to start returning cash to shareholders at some point. And so I think where TeraWulf is now going is, we have gotten to a size and scale in Bitcoin mining and ultimately high power compute where we're going to generate a lot of free cash flow. And our perspective is it's time to start returning that cash to shareholders. And you will see us, I think, execute on that buyback, probably authorize a bigger buyback, and start harvesting the cash flow from our operations. So I know we just covered Nautilus and the convert.
So yeah, I remember there was 2 3 year extensions, and that was something that TeraWulf was like advocating in their updates, and regularly telling the market, this is what it's not just a 2.5 years or 3 years left at the time; it was another 6 years. So effectively, for a long time through this Bitcoin mining cycle, are you suggesting that those were just cancelled, or was there any sort of like was that part of the package in terms of the 92 million?
So as you know, and it's even more complicated than that, right? We had an expansion option, which we executed.
Yes, 50 megawatt expansion option as well. I forgot about that. Was another thing that was in place. Yeah.
That's correct. But again, that expansion option, we would have to fund. We also would have to fund an additional substation. So the CapEx per megawatt would have been substantially more, and it would not be at 2 cent power. It would be at market power. And market power in PJM West at that node is much higher priced than market power at Lake Mariner. And so and I don't want to divulge too much, but
I get
but
that.
the reality is, like, it became a very complex situation where you've got one of the biggest companies in the world, Amazon, you've got Talon, and you have TeraWulf. And right, so the last thing on earth I want to do is be in a litigious situation with the same type of customers I'm trying to cultivate at Lake Mariner and our other sites, right? So it sort of became, and then I have to tell you, thank goodness we sold it before the FERC ruling, which blocked, because you can only imagine how contentious that relationship might have gotten at that point, where, Amazon is an amazing company, but they just paid $650 million for something that, like, the first step they took got shot down with their partner. So we are, I think, very blessed, very happy that we are out of that situation with a great price, and we're able to take all that capital. I mean, honestly, the way I think about it, Anthony, is Bitcoin mining is kind of like a refinery, right? Refineries tend to trade peak to trough at like 6 to 12 times EBITDA. That's how I think about valuation. So I just sold a 6 to 12 times business, and I'm reinvesting in what I think is probably a 15 to 25 times EBITDA multiple business. That is a home run for TeraWulf and its shareholders.
Yeah, and we'll come on to more of that in a bit. Obviously, with the other stuff, so I do realize in the last, and we'll come on to earnings now. In the last quarter, you didn't actually use any of the ATM within that period. I mean, it's fair to say that in the previous periods you had used the ATM. I don't want to put on the podcast that TeraWulf's never used an ATM. I mean, you have sold shares over the last couple of years. Probably as much as most of the mining companies, not raised as much capital, but sold as many shares in terms of physical shares. But your share value was a lot lower than maybe some of the other companies. So therefore, you've got a high share count in comparison. But it's interesting that the share buyback. And did you say that you've already started doing that, or is there a plan to that at certain points?
Yeah, so the board authorized up to 200 million, and that's through the end of next year. In the convertible offering, right? Part of it is, as convert shareholders come in, when they set up their trade, they have to short a certain amount of stock. Because if you really think about what convert shareholders are doing, which is why everyone in the space is doing a convert, is they're monetizing vol. And we have really high vol, all of us do, in the Bitcoin miner. So it's sort of a beautiful product for all of us. As part of that overnight process, we had convert shareholders come in and have to set a short. So using the buyback, we basically just cleaned up all of that technical and bought back on an overnight basis 115 million of stock. And so you hit the nail on the head, though, Anthony, and I know I've been preaching this for a long time, and it's been a lonely island to be standing on. But there's two things. Number one is profitability. Okay, I was EBITDA positive to the tune of about 6 million this quarter. Riot, Marathon, Cypher, all negative EBITDA. When you adjust out the BS for Bitcoin price up or down, right? Because I put that to the side. Core Scientific, positive, but Core is a lot bigger than I am, and they had 10 million of EBITDA. Okay? So number one is, I am focused on profitability. That has been, as you guys know, I don't care what your revenue is. Some of my peers talk about revenue. Doesn't matter. If your revenue could be billions of dollars, if you don't make any money, it doesn't matter. So number one, profitability. Number two, dilution. Like I said, we needed to use dilution over the last couple of years because I had debt, and that debt was like handcuffed debt. I could not do anything. So yeah, I had to use some of that, A, dilution to fund CapEx, but B, to pay down my debt. So now I'm out of that. And now I am going the other way. And I am buying back stock. I hope at some point to pay a dividend. But that could not be in more stark contrast to the quote industry leaders in this space, Marathon, Riot, Cypher. I mean, we can name them, but particularly the bigger guys. I mean, I was just looking like Marathon diluted by $600 million in the second quarter and subsequent, or excuse me, the third quarter and subsequent to third quarter end. Like they have issued $1.7 billion on the ATM this year, 9 months year to date. Riot's issued $1 billion. So I get it. And like I am not trying to throw shade at them, but my point again is at some point this industry has to stop growing just for the sake of growth. Because again, growing with profitable growth, fine. I'll give that to you. By the way, CleanSpark does an amazing job of that. They've got really low power costs. They generate profit on every Bitcoin that they're mining. But if you are losing money on every single Bitcoin you're mining and you continue to grow by issuing equity to fund that growth, and then you pay your management team like they're the starting lineup for the New York Knicks, that is not a viable business model in the future, period. And I'm saying that not as CFO of TeraWulf, as an 18-year buy-side institutional investor. At some point, that music is going to stop because people are going to be like, why would I buy this business versus just buying Bitcoin? And I know people will be like, oh, yeah, but they've got like 1,000 Bitcoin on balance sheet. Okay, fair point. But again, why not buy
27,000 in terms of Mara?
why not buy the Bitcoin ETF, never get diluted and get that price appreciation? And by the way, for
No cost.
all the Bitcoin miners out there that hodl, when Bitcoin goes to 100 or 200,000 and they actually sell Bitcoin to fund CapEx instead of issuing equity, I will be the first to applaud them. I just don't believe, because it's human nature, I do not believe that they will ever do that. I think they will just continue to hold it on balance sheet and like never ever monetize it. Now I know, like again, CleanSpark, I've listened to Zach and Gary, I have a lot of respect for them. I think they do a great job. They've said they will, but I am like not holding my breath waiting for the day that actually happens. Because how do you determine like what price? You're like, oh, 100 is great. Oh, well, maybe it's 200. Well, what if it goes to 5? Well, what if we have a Bitcoin strategic reserve and all of a sudden it goes to 1 million? Like, where are you going to draw the line as to where you're selling the Bitcoin?
And you're using the ATM effectively, not for capital costs, but for operational costs.
Yeah.
Because if you're hodling everything, where's the actual physical cash coming into the business to pay your bills?
And again,
So it is a dilemma, and you can sort of like I'm on either side. Paul seems to think I'm a hodler. I only hodl my own Bitcoin. I don't sell that, but I'm not here to say which is the right strategy. Time will tell which is the right strategy, and effectively, some miners fell foul of and Core Scientific fell foul of raising a ton of Bitcoin previously, and then were forced to sell it at the lowest price because they needed the cash to pay down the debt. So it can go massively wrong for some companies. And we'll come on to sort of like what we think the Bitcoin price might do, or what's it going to impact in terms of whether companies decide to go full focus into HPC or Bitcoin mining, because there is now a sort of like I was going to say polarized, but it's not too polarized because there's only CleanSpark at the moment who have said no to HPC. But in terms of you've mentioned some of the earnings that they say. It would be remiss of us to not ask the CFO of the company what he believed was the sort of like the key points from the Q3 earnings update that you just released.
Yeah, look, again, to me, it's EBITDA and back to Nautilus, because you guys, so the other thing with Nautilus, as you guys know, which is really confusing for investors, is I couldn't consolidate it because GAAP rules prevent when you have owned less than 50% of a JV, you can't consolidate it. And so that was really frustrating. And so now having Nautilus gone, and having all of our capacity owned. So what you will see, I think, in the fourth quarter and in the first quarter, particularly in the first quarter, as we ramp up from 200 megawatts to 250 and go from, about right now we're at about 8.5 exahash, and we're going to 13, is that'll be streamlined and very simple for people to understand because that impact of the JV will be gone. And so I'm really excited about that because, as you guys know, I'm trying to make this as easy as possible for both institutional investors and retail investors. And so having that be streamlined and very easy for people to understand and for me to explain, I'm really looking forward to. So that was another reason why I was excited to monetize Nautilus. But again, from my perspective, I look at our results and 6 million of EBITDA, positive free cash flow because I only had about 700,000 of cash interest expense in the quarter. So I am generating money from my business. That's how I think about it. I think when some people will look at it and be like, "Oh, you guys had an earnings loss." I'm like, "Yeah, we did, but that's because I had 15 million of DNA in the quarter." So as you guys know, depreciation in this business is odd, and I'll explain why. But my DNA is very high because we amortize our mining fleet over 4 years. So all of that amortization, like if I spend $100 million on miners, 25 million of it each year is being amortized over 4 years. And so the reality of that, though, is miners are become obsolescent two ways. One is physically, and the other is economically. So if you think about physical obsolescence, I'm at an advantage to my peers because I'm in a much more friendly ambient temperature environment where I don't have really hot heat. We've never had one day over 100 degrees at the site in 45 years of record keeping. I'm right on the shores of Lake Ontario, and I'm not dropping my miners into oil to keep them cool. And I don't have, a lot of dirt and dust flying around like people do in West Texas. So physical obsolescence for me, I'm at an advantage over my peers. Economic obsolescence is a function of your power cost, right? And then also halvings. So the reason we kind of depreciate the miners over 4 years, generally speaking, right? It's kind of been tough for, particularly with Moore's law leading to greater efficiency with miners. It's been tough to kind of keep a miner through a halving. That being said, I think particularly with like the new miners, the S21s and others, and I think miner efficiency probably will ultimately plateau. If I had to guess, like high single digit joules per terahash, right? Maybe kind of 5, 6, but like in that sort of 5 to 10 joules per terahash. So I think we're kind of getting to the point where these miners are going to last for longer, but that will be a function of your power price too. Like if you have 8 cent power, your miner's not going to make it through a halving. If you have 4 cent power, your miner has a pretty decent shot, I think, of making it beyond 4 years. And so back to the point of like when people look at my earnings, Anthony, sometimes, particularly with traditional institutional investors, people will call me up and be like, "Yeah, but you guys are losing money." And I'm like, "Well, that's on the net income line. And it's a function of my DNA, which I just explained to you. And it's also a function of the fact that I can't consolidate Nautilus." So I think what you will see from us next year is we will be a positive EPS company because now I've got everything consolidated in at TeraWulf. And with my entry into high power compute, that is a very high margin business. I mean, it's like 70% EBITDA margins, and that will generate a lot of positive earnings. So the good news for us is I'm not going to be a taxpayer. I've got 200 to 300 million of NOLs, so I'm not going to be a taxpayer anytime soon. But I do think for traditional investors, both retail and institutional, we are turning that corner, and it will be a more positive EPS business in the future.
You raise an interesting point on the depreciation. You're saying using 4 years. I know some of the other miners are using 2 years. When I started in this space about just over 4 years ago, 3 to 4 years was probably something. I think at one point Marathon were at 5 years, and you're already starting to say in the conversation the fact that mining machines aren't lasting 4 years. So what would be the issue in reducing the depreciation years? Is there a benefit of having it 4 years, or is it? I mean, if you're hitting more depreciation, bear in mind you're growing in two from the future, growing in two business units. You're growing your HPC and your Bitcoin mining. Is there a benefit in taking that depreciation earlier and getting probably closer to maybe the life? I mean, we're seeing miners being even sort of like the high S19 miners now being replaced by S21 miners. Even XPs have been replaced, and they weren't out that long ago. Certainly not 4 years ago. So on depreciation, what do you as a company do you sit down and determine that length of that period, and can it change?
Yeah, look, it's really hard. It's the short answer. And by the way, um, to complement the SEC, which I know is tough in this business, but I had a 6 to 9 month odyssey with them on approving our filings and our disclosure. And it basically, after going through a lot of issues, came down to this point. And um, they were really helpful. I got on the phone with them, explained our perspective on why we are doing it for 4 years, which is again is difficult because this is a young nascent industry and there are not a lot of data points. And so coming from power, like in my background, I would make the analogy of if you look, every nuclear facility in the US, right, originally had like a 30-year life. Every single one has been extended beyond that. So that initial depreciation period that they used was wrong. And so my point is not like I know it's wrong, but it's
It's
reasonable.
we're still early, aren't we? We're still
Yeah.
early in
Yeah,
the
I
industry
just
to
there's
really
just
to work out the correct time frame, and that's why every miner's got a different length of period. And when you're saying about the losses, I mean, some of these other miners have been, I mean, some of the depreciation levels that we've seen in these Q3 results from the mine are in sort of 60, the hundreds of millions. And so, that obviously impacts that position. It's an I mean, I love this terminology. It's a non-cash cost. It's an actual true cost.
well,
It's the
look,
only way you can show what you've paid for the miners in the first place is depreciation. You don't. It doesn't come into the account. It doesn't come into the revenue statement any other way. You raise money from either debt or through an ATM. That doesn't show in the revenue statement. It
yeah,
only
look,
shows when you depreciate the machines, and that's the true. That's the cost. That's the cost of buying.
yeah. So look, I let me say this. I agree and I disagree with you, Anthony. So obviously, from a cash marginal cost perspective, in my opinion, should not be included. It's not, in other words, the capex is the cost of setting up your business, right? And depreciation is a function of that. And so my only point would be, uh, you have to come up with some kind of reasonable and defensible period to amortize. 4 years to your point, like I think some of the miners may be shorter, some of them may be longer, but that's the stake in the ground that we put in because we just don't have enough data yet in this industry to know one way or the other. So that's what we're using. That's what we've gotten the SEC comfortable with. They have actually been very user friendly to work with. And like once I explained to them kind of my perspective on this, it was a very productive back and forth that I think got to the right place. But back to your point of like, to me, there's no right or wrong answer.
No,
There's just
I agree with I agree with your position on cash cost. All I'm saying is, if we're all saying cash cost, and then the raising of capital through an ATM is irrelevant then because it's if you're not going to share that cost. If we were to say how to build a business to 250 megawatts, 500 megawatts, 1 gigawatt, because you're using a hamster wheel of ATMs to raise that capital, and then saying, you know what, this last quarter we're cash flow positive. Well, you raised you just said Marathon's raised $600 million
yeah,
in a quarter,
yeah.
and so that there's a cost of raising that money.
I
Um,
mean,
and
100%.
I'm just saying, I appreciate,
Yeah,
I talk in terms of cash costs because at the end of the day, the revenues from the Bitcoin mining come in, and you've got to pay your energy, your staff costs, your operational costs, and if you've got a balance at the bottom, positive, thumbs up, you can manage the business. But there's, there's no accounting other than depreciation for the fact you've just spent a
I
fortune
agree.
on building that business up.
And again, that's why I'm saying at some point it has to stop.
Yeah,
And you
yeah.
have to start, you have
We're
to
on the
start
same page, I think, Patrick.
you have to
Yeah,
start running the business for cash and harvesting cash, which is the result of all that of that CapEx spend. So that's
yeah.
why I think like that's where we are now sort of rounding that mountain and coming down the other side. And I'm saying, stop. We're not diluting anymore. We are fully optimized from a financing perspective. We're entering a new line of business. We are going to be generating a lot of cash, and it's time to start rewarding our shareholders for this journey with us. And we are going to now harvest the cash from the business we built. And so to your point, like I think the reality is if you went and looked at every single miner, including us, and you added full depreciation on a dollar per Bitcoin basis, not one company in the space, including, and I view us and Cypher like as top decile, for no one would make money mining Bitcoin. Not one.
No.
Like if so, but again, and I get it because part of it is you have to establish a bit like this would be like if, ExxonMobil starting with, 1 million barrels of production and then ramping up like there's a cost to kind of get your business to a point where it's
Yeah.
sizable and scalable, and then you start harvesting. And so the problem I have with some of our biggest peers is like this whole concept that, oh, we got to keep growth with network hash rate. That's total bullshit. Like at what like that just gives you an excuse to grow into oblivion in the future. Like at some point you have got to stop and start harvesting cash. And like again, the thing I keep coming back to is like you either have good power in this business and can make money or you don't. If you have bad power, it's so funny. Everyone focuses on Bitcoin price. I'm like, okay, fine. Bitcoin price could go to 1 million. If network hash rate goes to 1 million with it, which is what happens all the time, you are not making any money. You're making the same, you're right. Like, and you look, I mean, network hash rate has been off the charts. And so that's why when you look at like hash, net sort of hash price less hash cost, no one's making much money, even at 90,000 Bitcoin. And so again, I just come back to like hash price has to stop growing at some point, and these companies have to act like rational commodity economic producers. And the only ones that can hold them accountable and force that change are investors, period. And I've seen it happen. Like I watched it happen in oil and gas in the 2010s. Chesapeake Energy went from like trying to grow into oblivion to all of a sudden the capital markets shut them off and they went into how do we harvest cash? Let's sell off a whole bunch of assets and harvest cash and become cash flow positive. The same thing happened with Uber, right? Like at some point, these growth companies, you have to become cash flow positive. And so I just, again, I don't mean to throw shade on everyone
No, no,
else.
no, no. It's no. We're on the. I think we're on the same page. I was trying to, I wasn't saying you guys or anything. I said I'm on about the industry itself. I mean, it's a new industry, but this continuous like racing to get the next machine, and it's not included. And then we'll say, we're cash flow positive. I'm like, well, not really.
No,
I mean, it also
no.
grits me about stock compensation as well. But I mean that's a separate issue. We're not covered that today. But I'll let Bryce get a question because I feel he's
Yeah,
getting a bit
boys,
dry
I'm
here in the
jumping
mouth.
in. Watching these accounting guys talk about the finances, we got to move on. We got to keep the interview moving. I think honestly, you're saying the exact same thing though, because I've heard
Yeah,
Anthony talk about this a lot, Patrick, about this endless ATM cycle, just not sustainable, right? And you're exactly right. Investors at some point want to make a return on their investment and pull cash out. So with that being said, you've referenced a few times Bitcoin, self-mining. Last time we talked with TeraWulf, it was a little unclear what next year really had in the cards in terms of growth, fleet upgrades, the mix of HPC versus mining mining. So we'll get into HPC following this, Patrick, but can you give us a good overview of yourself mining, what it looks like next year now that you've changed around your portfolio, you've got rid of Nautilus, you have Lake Mariner, what machines are you bringing in? Just a full mining summary here.
Yeah, sure. Yeah. And we have, as you know, we put out pretty detailed investor decks. And so, all this can be found online in our November investor deck. Yeah. So we have a page in there that kind of shows the update to our mining fleet. And, pre the Nautilus sale, we were at 10 exahash. After selling Nautilus, which is about like 1.9 exahash for us, that kind of brought us down to like 8.1. We have had some we've had some issues with some miners this year. I know a lot of folks have asked me about this, but like, you know, 8.1 is kind of like our nameplate capacity, and we've been lower because we've had some issues with our XPs. We've had some warranty issues with Bitmain. We're working through all that, but it's been slower than we would have liked. But we're getting to the right place quickly now. So that's a good thing. So I think you'll see us over November and December. We're doing, Anthony made the point of the S19. So we took a whole bunch of S19s from Nautilus and our S19 fleet, and we basically monetized, I think, about 40,000 total S19s. And some other machines brought in about 10.5 million bucks from that. And we're using that along with some cash to build building 5. So miner building 5 for us is another 50 megawatts. So that'll take us from, call it that 8.1 exahash, which is roughly 195 megawatts of power consumption. That'll take us up to 250, and that will bring us, with the addition of the S21 Pros, which is the most efficient miner out there from Bitmain right now. We're buying, I think in totality, we had a 30,000 machine option with them. That option, we executed part of it last quarter. We executed another part recently, and then we'll execute the final part of it. So we'll have, call it out on the site, roughly 30,000 S21 Pros, and that will bring us in totality in the first quarter to just over 13 exahash. That's where, again, I think we'll plateau there, I think, for, 2, 3, 4 years. Run it, try to harvest cash. Generally speaking, my view on that is, and you can kind of do the cocktail napkin math, but that business generates like 100 to 200 million of free cash flow every year, or effectively EBITDA. And I'm just going to use that cash, harvest that cash. And then as we enter high power compute, I've kind of fully equity funded through the convert and also through the Nautilus sale, the build out of 72.5 megawatts. I will be able to project finance and take myself out of that equity funding to the tune of like 250 to $300 million. So when you look at my deck, you'll see in 2025, I have over 380 million of unallocated cash. And so our general view is, as you guys know, like the management team, board, insiders, we're the single largest shareholder in TeraWulf. We own about 30% of the equity of the company. And so if the market's not rewarding me with the right multiple, in other words, if it's more of a Bitcoin mining multiple as opposed to a high power compute and AI multiple, I'll buy back as much stock as humanly possible over the next couple of years until we have the right multiple in the market. So that's what I'm going to do. I think Anthony, you asked me before, look, you never want to say never, but like we are done from a dilution perspective. And I am going hard the other way. Whereas, yeah, I had to make some tough decisions over the last 2.5 years to keep this company alive. But we're alive, we're thriving. Now we're kind of hitting our stride. I think no more dilution and like, let's reward shareholders for being along and start sending the share count the other way. And that, as you know, I think, with the diversity of Bitcoin mining, but also into high power compute with a lot of expansion potential in the high power compute and being able to do that in a non-dilutive manner and go the other way, that's in really stark contrast, I think, to anybody else, any other peers out there in the space.
Plus, you're incentivized as 30% shareholders in a company to keep that count down. So that works well. I mean, and actually, I mean, you go back maybe a year ago, shareholders were like quite happy for ATMs, but I'm seeing a lot more now on social media about the distaste that that these companies are doing the dilution. I sort of like I'm on the sort of fence. I mean, I get it. Companies want to grow and grow effectively. I mean, you already mentioned CleanSpark. I mean, they've made, go back to October last year. So a year ago, they were valued at about 600 million. By March, it went to 4 billion. And you've had a similar rise this year in terms of that. But they did it through ATM and they used it very effectively. And, shareholders in CleanSpark would, as of March, would have been really, really happy. I mean, the share price has halved since then. Like a lot of share prices, except yours and Core Scientific's, and we'll come on to that reason now effectively, because as we understand about the Bitcoin mining getting to 13.1, and just go through your presentation. So the 250 megawatts for Bitcoin mining, that was your whole amount. I must admit, I read that as there was going to be an extra 200 megawatts on top of the 50 that you were building now, but I can see now that's the whole amount for Bitcoin mining, which you will have by the end of Q1. And then you have this other side of the presentation that says this is a HPC, and that's the bit we sort of like want to focus on now. So you've already fulfilled your 2 megawatt project. Can you tell us from that project what have been the sort of like the lessons learned? I mean, I speak to so many of these of the companies, the CEOs, and and we had Adam on last week, and he made a really relevant point about it's not just about capital, power, water, people. He said that was the key component for Core Scientific, having the people who attend these meetings. And when they're having meetings with CoreWeave, they take 30 to the meeting, and Core Scientific equally took every supplier, every component to that meeting, so that they would be in a position there. How sort of like talk about your projects, and then we'll go on to the two other projects, CB1 and CB2, from that, please.
Yeah, sure. So let me just say, look, I think Adam, the whole, Russell, the whole Core Scientific team, I think they're doing an amazing job. And, I'm one of their biggest cheerleaders. And I think when you see us announce a customer, I feel like it'll be a rising tide, kind of lifts all boats, because investors will understand, hey, there is a lot of demand out there, like multiple companies can do this. But yeah, look, I think they're doing an exceptional job, and I tip my hat to them. So look, let me just sort of back up and like set the stage for high power compute and AI for TeraWulf. So 250 megawatts of Bitcoin mining. That's kind of where we plateau, 13 exahash, right? And we have our site, right, being a retired coal plant site, has infrastructure in place today to basically ramp up to 800 total megawatts, roughly. So we kind of guide to 750 because we never want to push the maximum envelope there. So what that means is I've got 500 megawatts of expansion into high power compute and AI before I have to go touch my Bitcoin mining, right? So if you think about, and again, I don't know if we will be mining Bitcoin in 40 years from now, but if you think about the cadence, it's going to take me, depending on who our customer is and how fast or slow they want to run, it's going to take me realistically 3 to 4 years to build out that 500 megawatts. So directionally, if you use the same numbers that Adam has disclosed roughly, and that I've disclosed in my deck, which, by the way, I will take a victory lap because I did put on a piece of paper 3 weeks before Core Scientific and CoreWeave announced their deal, what we saw as the business models, and they hit ours like right squarely in the middle. So again, using those numbers, which I think are pretty fair, which you can see in our latest deck, I think on page 15 or 16, 500 megawatts of high power compute hosting is roughly equivalent to 500 million of EBITDA. Okay. And that business, again, I think should be like a 20 times business EBITDA. So that's $10 billion of value, right? If TeraWulf today has 400 million shares outstanding. So if I execute on that, in my opinion, that's $25 a share to the stock, period. And that's not even including my Bitcoin mining business, right? Which again, I think that business 100 to 200 million of EBITDA or cash flow and should be valued 6 to 12 times. It's probably closer to trough today, and we're generating, I think, 100 million. So, call it $1 billion, right? Which is another 250 a share. So there's just massive potential here. But back to your point, and by the way, we are now financed. So my job is done for the first 72.5 megawatts, which was really, really important to our customers to make sure that we could meet their GPU deliveries in 1Q and in 2Q next year. So we took that execution risk off the table by doing the convert, taking matters into our own hands. And then in the future, what you will see me do is anybody, with those customers, if they want the next 50 megawatts or the next 400 megawatts, they will have to execute the lease well in advance, give me a 1-year revenue prepay, and then I will go to the project finance market and finance that additional, call it 70%, on the back of a 10 plus year lease with that customer. So that's why, for me, it doesn't require any equity, which I'm really excited about. But that is sort of our approach on high power compute and AI. What we learned with the 2.5 megawatt building, right, is if you think about where we started and where we're going, I'll give you two things. We started with over 24 potential clients, customers. We now are down to a handful. As we've told you and you've heard publicly, we will not announce an LOI, but I think you should understand, like, we're going to announce a deal by the end of the year, which means we've done the LOIs with that handful of like all the economic terms have been negotiated, which is why on page 15 or 16 in my deck, I didn't change anything. So like we're down to like lawyers talking to lawyers, negotiating a lease document that's like 100 pages long. Like it's just complicated stuff. But the different buckets of demand, I think people don't really understand. I'll tell you what we are seeing. It's really 3 buckets. It's hyperscalers, which is all the public markets talk about. It's large enterprise customers. So think like Fortune 500 customers that really consolidate through companies like CoreWeave, as an example. And then it's what I would call like these sort of digital native sovereigns. And when I say sovereigns, I mean if you think about AI, right, it's going to be used for all the Fortune 500 companies, but every single sovereign in the world, whether it's for defense or intelligence is going to have its own AI business. So the ones that are moving the quickest happen to be sovereigns that have big sovereign wealth funds because they have all their funding and can stand up companies on their own in partnership with a Microsoft or an Amazon or a Google. They will not buy capacity from those companies because they know those companies are pimps for data. That's how they make all their money. They sell your data, right? And so we have shied away. So we are focused on bucket 2 and bucket 3, which are large enterprise customers and sovereigns. And the reason we have shied away from the hyperscaler bucket is twofold. One is the economics. So when you look at my page 15 or 16, you'll see general economics that, the bucket 2 and bucket 3 are willing to sign, which is similar to the CoreWeave Core Scientific deal, is effectively a 20% yield on your cost. The hyperscalers have been willing thus far to kind of be more in like the 10 to 12% range. So that differential is literally billions of dollars for TeraWulf shareholders. So we have not focused on the hyperscaler bucket. The other reason we haven't is because if you think of the game they are playing, it is a kingmaker game. And what do I mean by that? Internet 1.0. You had Netscape, AOL, Yahoo, Google. Google won. Like that's what everyone uses. And so from my perspective, I have no idea if OpenAI, Google, Amazon, Microsoft, X, I don't know who's going to win, but I can tell you those businesses are amazing businesses and they are not in the money losing business. So I don't want to sign a contract that's 10 to 20 years with somebody that loses that game because I don't know. I can't see that far in the future. But what I do know is large enterprise customers like banks or healthcare companies, they control 95% of the data out there in the world, and it's private. And they're going to provide services to you, Anthony, and you, Bryce, and me into eternity, right? You're going to like the other day I called Spectrum, who I loathe, and I got an AI assistant and I was able to cancel my service in 2 minutes. It was amazing. And so my point is like those are the long tails that we see out there as well as the sovereigns. And that's where we want to be today with those customers. So that's where we are focused. And people keep asking me, well, this is taking so much time. I'm like, yeah, it's really complicated. It's kind of like three-dimensional chess because I need to know where they are with NVIDIA. When are they getting GPUs? I need to know where they are in capital formation, right? I mean, a 50 megawatt building is $1.5 billion of GPUs. Like these numbers are huge. So yeah, the process takes a long time. But that's, Anthony, where we're going. And then with regard to people, we have augmented our team significantly. We have augmented that team with internal hires, but more importantly, we are partnered with NVIDIA. We are partnered with integrators like Dell and HP. We have consultants like T5. I mean, we are crawling in partnerships and have augmented our team. And what I can tell you, having sat at our site with potential customers, I mean, one of my potential customers came to our site and said they've been to 60 sites in the US. Okay. Have interacted with all the management teams, done all the sites, and they're like, you guys are head and shoulders above everyone else. So we want to do business with you. And it's not just the quality of your site, it's your team. And so that made me feel really good because again, I'm the finance guy. So to me, I've kind of turned to my operations team. I'm like, I just did my job. You guys are funded. Now comes the hard part. You have to go execute and build these buildings, which, as you guys know, I can count on two hands the number of 10 to 20 megawatt GPU clusters that are water cooled running in the world today. So this is not like serial number 100. It's like serial number like 4 or 5 or 6. So yeah, there's execution risk and that's what keeps me up at night. But I feel really good having sat there with that customer in particular, who's spent a lot of time in the space diligencing different teams and the ability to deliver, that we have the right team.
Yeah, I mean that's really good. I mean you've basically took a few of the questions away from me. I mean obviously the surge in the market cap this year is probably now aligned to the fact that it's imminently about to be announced that you'll have some sort of a partner in terms of a HPC hosting contract, and obviously the size to be determined when that gets announced. But I mean, that share price has ramped up, and it even had my head scratching in terms of looking at the fact that a lot of miners have talked to HPC. It's only one big mine that's sort of delivering in terms of this big contract. Yes, don't only Bit Dish slightly quick because they've got a big customer in terms of the size of that company. and that shouldn't be remiss of me to say that. But Core Scientific had this big deal that everybody else wants, or wants part of. I think
I don't.
even Zach turned around and said, "We're not doing HPC, but you know what? If CoreWeave turned up with what they've offered Core Scientific, we take that deal."
So so so, and again, I'm not. I think Adam and the team are doing an awesome job. But I will tell you, I would not want one aspect of that deal, which is I don't want my customer to fund everything. And the reason for that is if your customer, for example, is Meta or Amazon, if your customer is $1 trillion public company, fine, go ahead, have at it, you can fund it. If your customer is a $25 billion privately valued company that is now on the hook to you for $15 billion, that kind of is like a little too much of a good thing is a bad thing. Like how, again, they don't have fun. Like I know they're setting up to go public, which is great, but today
Next year, yeah.
they have written checks that they can't cash. So again, and by the way, as you guys know, I just want to be clear. I think they have done an amazing job. I'm like one of their biggest cheerleaders. So this is like a little bit nitpicking from the cheap seats, but I'm just telling you, like from
No,
my
it's a
perspective,
risk, and it's probably why their share price in my you've already articulated about multiples of 20. I mean,
yeah,
I spoke to a few of the Wall Street guys in Germany and Sweden a few weeks ago, and they were saying, even if you were cautiously saying 15 would be a good number if you were having a bit more caution to it. But it sounds like their share price is being suppressed because of the fact that they have got a large amount of money to come from that company to help set up this business. And like you say, CoreWeave at the moment are non-public, and so they're going to have to generate that funding, effectively internally by doing private offerings or whatever to raise that
yeah.
sort of capital. I mean, you know that more than most people we speak to. So I mean, you've articulated that.
I mean, even Anthony, I was saying, even like OpenAI, amazing customer to have. But again, 150 billion valued private company. It's that the only thing I'm saying, and I would love to have them as clients. I'm not trying to throw, I'm just saying there's a big difference between a public company that has $1 trillion market cap funding something versus a private company that has a big valuation but doesn't actually have the cash sitting there.
True.
Patrick, I really, really enjoy listening to you chat about this stuff, and getting the deep understanding from the CFO perspective is amazing here. So I wanted to give you the opportunity to wrap up. We've only got about 2 minutes left. Is there anything we've missed or anything you want viewers to know that we haven't talked about?
No, I think we got it all. I think we're super excited about the future. Very grateful to you guys, to the whole Bitcoin community. I would say I don't want people to think, we're abandoning Bitcoin. We're not in any way, shape, or form. I mean, we love Bitcoin. Just because I don't stack it on my balance sheet doesn't mean I don't love it. I just don't, as you guys know, fundamentally agree given the alternatives that investors can go buy an ETF for 5 basis points. So my job is, maximize profitability, maximize returns for shareholders. And that's, I think we're finally entering a really exciting phase for the company where we've got, a new line of business, really high quality customers coming, and a massive amount of free cash flow. So it's pretty exciting to, as you guys know, it has been an odyssey for 2.5 years. And to see, I mean, I couldn't be more proud of this team, like our whole operations team. I mean, when we kind of came in here 2.5 years ago, and we had a lot of debt, and Bitcoin was at sub 20,000. I mean, we were like a patient with no pulse. And now, we're up and running. And I know, Anthony, you mentioned the stock price. I will say, and I don't, me, I don't mean any disrespect by this because I was in an investing seat for a long time. But where we are today, I don't even look, I don't even care what the stock price is because I don't need it, right? I don't care. Like, I'm not using the ATM. I'm fully financed. all we have to do is execute. And I think, like I mentioned to you, I think this will be a $20+ stock in, 2, 3, 4 years. And that's what I am focused on. I don't care where the stock price is right now. I try not to look at it because I don't need it, which is an amazing feeling to have after the last 2.5 years and kind of, coming to where we are today. So really appreciate you guys have been really supportive of us all along. Super appreciative of that. Super appreciative of the entire Bitcoin community. And I'm really also excited to see what happens with, the new administration. This talk of a Bitcoin reserve, I think, could be a game changer for us. And having the right regulation come into place, I think will also bring the adoption level for the industry higher, which will be super exciting to see too. So yeah,
Sounds like a great few years to come.
Couldn't agree more. Yeah, exciting times. And you talk about getting the pulse back at the company. I would say that heart is beating and alive as it never has there, Patrick. Luckily for you and the team at TeraWulf, we named our company Power Mining Analysis, not Bitcoin mining. So if you do transition over to a new power usage, we're here to support you there as well. You guys, if you're still watching, hit the like button. Feel free to subscribe. If you have any questions that we didn't answer, which I don't know how that could be possible because we touched on everything. Great job, Patrick. Leave them in the comment section below. We'll make sure those get over to the team. Thanks so much, you guys. Have a great rest of your day. We'll see you back here this afternoon for more interviews.